Okay, so this is such a great example of the channel trade that that we're looking for all the time. I mean, this is so classic. This is SSYS, SSYS Inc. Now, it's normally a very thin trader, but today it's traded close to 1 million. Usually trades around 500,000 shares. And it is right at the breakout level here. This is a nice, a good pattern for it. But we can see that it came in around this $26 level. In here was forming this saucer pattern, and today really broke out. But look at this trade. Stock breaks out through the high of here, 26 or 25.85, pulls back, and then at this wedge, which is of course another one of our patterns that we use, like this, at the apex of this wedge, it breaks out of it, plus breaks out through the 25.85 area, pops up, pulls back, tests support, and then starts to head up, starts to trade up. Now, initially, this would have been our channel to look like this, most likely. Maybe even like this, something like this. But as it started to develop, we were able to then, connect these dots here and here. And so now we've got this channel. And again, we can see that at this wedge here, it's actually not steep enough, like that, right at the apex, it pops out again. And this is where it was holding the trend line. So we are able to draw this trend like this, and then we just draw the parallel channel to it and connect it to that top there. Then you just stay in this trade, just stay in this channel. Look at this thing. This is a low risk, low stress trade. It just never violates this trend line. Until now, it's starting to flatten out. A $2.50 move, low risk, low stress. You just stay in it. As it, maybe in here, as it got to the top of the channel, or here, you sell a little bit, all the way up, pay yourself. But it never broke this channel. This is such a great example of trading in the channel, just staying in this channel and letting it run. And it's still in this channel. And now it's broken through lateral resistance here at 28.64. It had a little trouble there, but it's still staying in the channel, hasn't violated it. And continues on. Now, if this broke down and started to trade below this 28.64, then you'd want to exit the trade. But until then, there's no reason that you should be out of this stock. If you took this trade, I'm not saying you did or that we did because I wasn't watching it then. But if you had been watching it and it popped out through this, came back, held support and popped, and you took that trade, there is no reason to be out 100% of your position. You'd be out part of it. As you go up, you can sell, but you can just let the rest run. This is such a perfect example of our channel trade.